and welcome. You have tuned into Buy Now, Sell Now and ET Now. I'm Shrishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the floor to get all your stock-related queries answered by the expert. But before that, let's have a look at what the markets are up to. So Cheryl, once again, we are trading with a negative bias on both the benchmark indices.
Absolutely negative bias. It is coming in for the benchmark indices. We expected a pretty subdued start. Remember, the GIFT Nifty was also indicating that we will be in for a very subdued start for the benchmark indices. That's exactly how it is transpired, as you can see it on your screen. Muted moves coming in for the benchmarks. It's Nifty Bank that is underperforming, 0.5% downtick coming in for the Nifty Bank as of now. If you look at the advanced decline ratio, tad bit tilted towards the favor of the gainers. But yes, initial hours of the trading session, let's see how that transpires. And remember, a brand new month is what we've started. That's in November, and we have a lot of auto sales trickling in as well. And so far, if you look at the auto sales number, they've been better than the estimates. Be it Mahindra auto and tractor sales, be it Bajaj auto sales, as well as Escorts Escorts Kubota. All of them have actually beaten at least ET Now estimates when it comes to their auto numbers. But let's see how it transpires going ahead. Talking about the list of gainers, then you have the OMCs that are actually pretty strong in trade today. Take a look at what BPCL is doing. It is trading with gains of about 2.5%. You have Reliance Industries also that is actually giving that support to the market. Therefore, you're not seeing a huge fall. 1% uptick coming in for Reliance Industries. You have Bajaj Auto, Hero MotoCorp, Tata Consumer among the other set of gainers in trade today. While on the flip side, you have Asian Paints that's seeing subdued trade. 1% downtick coming in for the Asian Paints. Nestle, Maruti Suzuki, JSW Steel, as well as Kotak Mahindra Bank are the other set of losers as of now. Let's put the spotlight then on sectoral indices, and let's see what the sectoral indices are doing at this point in time. You have the metal index that's seeing good move, that is actually seeing subdued move, 0.6% downtick coming in for the metal index. You have bank also, like I said, it is in the negative territory. And the realty index is also seeing a sharp up move as of now, 1.3% uptick coming in for the realty index. That's the way how the markets are looking like at this point in time. But let's bring on board Aditya Agarwala to actually try and understand which direction of the markets that we can see the Nifty actually move going ahead. A very good morning to you, Aditya. And today, a subdued move coming in. Do you think that anytime soon we will be knocking towards the 20,000 mark, at least before the festive season of Diwali?
Good morning, Cheryl. Good morning, Srishti. Thanks for having the show. It's a far-fetched dream at the moment, Cheryl, to see 20,000 levels on the Nifty. The kind of correction that we have seen in the market clearly suggests that we are in a temporary, or you can say an intermediate downward trajectory. And within that large up move that we had seen in the last few months, this is a temporary blip. And it's okay. It's part of the game. And on the downside, I actually will watch out for 19,000 in trade today or maybe tomorrow. And if that is broken, Cheryl, my sense is we won't be too far from the 200 DMA as well, which is 18,600. So I'm eyeing that mark of 18,600, which is the 200 DMA on the Nifty. There I could look at markets trying to form a base or maybe consolidation around those levels. At current levels, I'm not eyeing at 20,000 levels. Rather, I'm looking at a breakdown from 19,000 levels, which could trigger further correction in the Nifty. And same holds true for Bank Nifty. If you take a look at how Bank Nifty is also shaped up, it's clearly showing signs of weakness, and some of the large cap banks are actually correcting as we speak. So I believe Bank Nifty too can see a bit of selling pressure, maybe if not today, tomorrow. The only saving grace for the markets, as you mentioned, was the Reliance Industries, which is actually looking like a good trade and can provide some cushion to the market. So Reliance is actually buzzing and bucking the trend of the Nifty and the Bank Nifty. So barring Reliance, I believe markets will see some bit of a selling pressure overall in the next few trading sessions.
Okay, so that's the take coming in on the markets. Looking at a breakdown below that 19,000 level, and similar is the case for Nifty Bank as well, wherein some of the large cap banks are actually showing some signs of the breakdown. And today as well, we have the Bank Nifty options expiry. So let's wait by how the market action pans out to be. But with this, we are being joined by Blue Jet Health Management today onto the show. The stock today has seen a substitute listing on the stock exchanges, but nevertheless is seen a gains. As of now, it's holding up a gains of 12%. With this, let me welcome on board the management of Blue Jet Healthcare. We are being joined by Shiven Arora, Managing Director, and VK Singh, CEO of Blue Jet Healthcare. A very good morning, both of you gentlemen, and thank you so much for your time. The first question is for you, Mr. Singh, that this is a complete OFS, right? And no money is coming in the company. But for the investors, tell us about how do you see yourself growing in the three segments that you have presence in. You have a good presence in the API, CDMO, you have the sweetener segment as well. So going ahead, which one do you believe will drive the growth for the company?
Yes, there's no money coming into the company, but then for our all three segments, we have demonstrated an excellent growth over the last 3-4 years, and we believe that we will maintain this momentum.
Good morning, Mr. Arora, as well as Mr. Singh. This is Cheryl on the other side, and congratulations for listing on the bourses. But let me talk about your numbers now. If you look at your margins, they've actually seen a decline. And when I talk about decline, I'm talking about it being approximately 42% in FY21. Now, if you see in the in Q1 of FY24, that is, that margin figure has come down to about 33% or so. If you could tell us why is there a decline in the margins over that period? Also, what's your outlook going ahead for the margin? And if possible, if you could give us a sustainable level that you are envisaging when it comes to the margins for your company.
See, there's no structural change in the industry, and majority of our revenue is coming from the medtech industry, the imaging industry. And the dilution of the margins has been a global phenomenon for the chemical industry, and we are in performance chemicals. The reason being that the prices of the basic chemicals had gone up, the freights had also gone up. And in our case specifically, we had ramped up a lot on the manpower to provide for future growth. And therefore, the cost on the manpower side had also increased. And therefore, we saw some dilution in margins. But as the prices of the basic chemicals are returning back, you would see that in our first quarter results, there's been a margin expansion, and we are going back to the levels at which we were. And I would imagine that those levels are quite sustainable, and we will maintain the type of EBITDA levels and profitability that we had in the past.
Shiven, I want to come to you now and want to know about your expansion plans going ahead. How do you plan to expand into more facilities? Are you planning to add any more at this point in time?
So we are adding capacities from a capacity addition standpoint. As a company, we've been taking conscious efforts. Since 2018 to 22, we've quadrupled the reactor capacity to 1,000 KL today. And the capacity addition is about 50% from now in the next 2 years. Majorly focused towards contrast media intermediates and the third vertical, pharma intermediates, PI, API division that we have.
Right. You just spoke about basically your three segments. Will it be possible for you to share the margin profile for your three segments and also how will the margins pan out going ahead, and also which of the segments that you are present in is the most margin accretive?
At this point in time, we don't do segment-wise reporting, but all I can say very clearly is that the segments that we operate in are have significant high barriers to entry and are insulated from many margin pressures, and we enjoy healthy margin profile across the three verticals.
Okay, Shiven, to understand the industry dynamics, the top 4 players account for 75% of the global market share in contrast media intermediaries. How does this play out for you in adding the market share, and any geography or clients that you are looking to add at this point in time?
See, across three business verticals, we have invoiced to about 400 customers across 39 countries in the past 3 years. We feel that there's enough and more depth in the customer profile that we have today. But since our major vertical is the medtech contrast media intermediates, it optically looks focused and heavy towards 4 or 5 key players. But that's how the worldwide segment is structured.
All right, then. All the best, Mr. Arora, as well as Singh, for the journey on the bourses. And congratulations for a good listing as well. If you look at the stock price of Blue Jet Health, right now trading with uptick of about 12%. Thank you, gentlemen, for joining us on the show. On that note, we'll take a break. When we come back, we'll have another management, and then we'll start taking your queries. So don't go anywhere, viewers. Welcome back. You're watching Buy Now Sell Now on ET Now, and as promised, we are back with another management. And this management we are going to talk about is Motherson Sumi Wiring, and the reason being is good set of numbers that the company has posted in the quarter gone by. And to talk more on the numbers, we have Mr. Mahinder Chabra, who is the CFO of the company, and Anurag Gehlot, who is the CEO of the company. A very good afternoon, rather good morning to you, Mr. Chabra, as well as Gehlot. Thank you so much for joining us in ET Now. And let's talk about your numbers of the quarter gone by. If you look at the numbers, whether it be the operating performance or the top line, bottom line numbers, the growth has been stellar on a year-on-year basis. If you could help us understand what exactly fueled these numbers in the quarter gone by, if you could shed some light on your specifics.
It has been a pretty good quarter as far as revenues are concerned. And since we are into a supplier to OEM, so I think it's more or less in line with the industry. The industry has been seeing a good amount of growth, and we have also been growing in line with the industry. As far as margins are concerned, yes, margins are much better. And there have been a lot of initiatives that have been taken by us as an organization. There have been operational efficiencies that have been there. Then there have been a better utilization or efficient utilization of the new plants that we had put last year. We are getting now much better results out of that. And in addition to that, we have also taken many cost initiatives, and all these are kind of resulting into better margins for our business.
Hi Mahindra, this is Shrishti also joining in. I just wanted to understand that how are the demand trends shaping up, because till now we have seen that all these OEMs are keeping their inventory ready for the upcoming festive season. But post the festive season, as of now as an OEM, how are you, as an auto ancillary company rather, how are you seeing the order book building up at this point in time?
So as far as business after festive season is concerned, like I mentioned, we are into OEM business, and our growth or our business is dependent on how the industry grows. And if the industry does well, obviously we do much better. And after the festive season also, we expect we should be in line with the industry.
Let's talk about the capacities. If you look at Motherson Sumi Wirings has actually added new capacity. If you could shed some light on the utilizations that is there currently, and also if you could add some color and tell us about your capex plans.
For this year, capex is 125 crore, and this is without land in building, because the land in building is rented in the sawmill. And for the future also, wherever the land is available, and the investment will be done by the appropriate company. As far as new projects are concerned, there are a few projects are already in pipeline, and we are going to enhance the more plants in coming time.
Right, so let me actually ask you a follow-up to that then. You just said that you plan to add some more capacities. Any particular segment that you're looking at, something that you can leave us with?
There is they can't define the particular segment. Obviously, India is the third largest automotive, in the globe, and second largest in the, road network. So the way the roads are coming with the astonishing speed, and the car penetration is still lower, compared to some developed countries. So I think for all the OEMs, not onto the passenger vehicle, all the segment, I think it's going to be a good time for all the OEMs.
Okay, it's going to be a good time for all the OEMs. Let's hope for that. But Mahindra, how do you expect the commodity prices, and especially the copper prices, one of your key raw materials, to shape up in Q3? And what sort of a trend that you have seen in Q2 till now and going ahead? What's the outlook?
Yeah, so as far as raw material cost is concerned, it's a combination of various factors. So one is a copper involved, which is one of the main components. Then we have a forex implication as far as prices are concerned. In addition to that, there are product mix change as well. So whatever wiring harness we produce in one quarter, it could be different in next quarter, or likewise, one period to another period. So raw material cost would depend upon a lot of factors. Some of the factors or some of the cost elements, we have a back-to-back arrangement or pass-through arrangement with our customers. Like mainly in case of copper and forex, these are the pass-through arrangements with our customers. With some of the customers, these are at a quarterly lag, and with some of the customers, these are at half-yearly lag. But these two items are passed through with our customers. And in terms of overall raw material cost, like I mentioned, it's a combination of various factors that we see.
All right, let's actually dive in deeper and put more spotlight on your numbers and your balance sheet. If you look at some of the concerns, there are some concerns regarding your higher number of working capital days, as well as the inventory being on a higher side, and that is on a QOQ comparison that I'm talking about. If you could tell us, where do these numbers stand now? Any improvement that you've seen now that we are in a different quarter altogether?
So I am happy to share that as far as working capital is concerned, we are doing better what we did previous quarter. Without giving any number of days of inventory has come down compared to the previous quarter. And likewise on the debtors or the receivables, we see a better situation compared to last quarter. So we are improving on working capital investment.
Okay, Mahindra, lastly, if I can ask you, and if you can help us understand the growth outlook going ahead. We know that you'll not be giving us any particular guidance in numbers, but will it be good to say that the second half of FY24 growth could shape up better than what we have seen in the first half? Because now that we have interacted with you, we get to sense that the demand on ground is quite positive. The new facilities that you have added are doing well at this point in time. So will all this add up to your numbers in the second half of FY24 as well?
Well, like as far as financials are concerned, a lot of initiatives we have already been taking. And also, like I mentioned, it's also because of the efficient utilization of the new plants that we have put up. So we assume like these initiatives should continue, and we should be kind of seeing these in the results as well.
All right, then we leave it there. Thank you so much, gentlemen, for joining us today on ET Now to talk about the way forward going in for Motherson Sumi Wiring, given the fact that you all have posted steady quarterly numbers and also you all are expecting good growth going ahead. Thank you so much once again for joining us on ET Now. And from the management, now we switch to taking all of his stock-related queries. Let me bring on board our experts for today. We have Aditya Agarwala, who's joining us on the technical front, while on the fundamental side, we have Avinash Gorakshekar joining us. A very good morning to you, Aditya, as well as Avinash. Thank you so much for joining us on ET Now. And thank you for actually waiting by very patiently. And Avinash, let me start the queries with you. Then the first query that I have is coming in from Ghosh Zada. He's writing to us from Delhi. And he's saying that he's holding Nazara Tech around 1,500 shares at a price of 870 rupees per share. He wants to know what's the future for the company over the longer term. He's saying he wants to know what's your take coming in for both of the counter, because given the fact that he's been tracking this company for a while or so.
Good morning, Cheryl. I think clearly Nazara Technologies is one of those few companies, which is a leading player in the gaming space and which is the only listed player as of now. The opportunity for growth over the next, say, 2 to 3 years is quite immense because gaming as a sector in India is yet new. Our sense is the kind of acquisition Nazara has done. I think you could see definitely a strong earnings growth trajectory, taking off from FY25 onwards. Numbers for the previous quarter have also been quite good. In fact, after a very long time, we have seen a good, robust, top line growth as well as a profitable growth. So I think, the time frame here should be at least 12 to 18 months. Only then one can expect a decent risk reward. I would suggest the investor should hold on with a little bit of more patience, keep a time frame of 12 to 18 months, and definitely you could expect a decent risk reward.
Okay, moving on, and Aditya, the next query is coming from Jay Krishnan from Kerala, and he's holding shares of HEG, but his buying price is 1,761 rupees, sitting at a mild loss at this point in time, but he can hold it for the medium term. Wants to know, is this a counter good to hold, or rather he can make a switch to Maruti at current level to compensate for the losses?
Srishti, I think he should continue to hold on to it. This entire space has done well for itself in the recent times. There is a bit of a correction that we see in the stock, but I believe most of it is done. So with a stop loss at around 1550, 1520, he can continue to hold on to it. Maybe look at a target of 2000, and once it crosses 2000, stock can also test levels of 2200. I don't see any reason to sell the stock. The stock is in an intermediate uptrend and should continue its uptrend going ahead. So hold on to it. As far as Maruti is concerned, if he wants to allocate fresh money, then yes, he can look to buy Maruti. But I would not suggest switching from HEG to Maruti at current levels.
Another coming your way, actually, Aditya. This one is from Padma Siva Rao, who's writing to us from Bangalore. He wants to know how much more can escorts actually go down. He's saying that he sold it at 27.50. Now he wants to re-enter this particular counter. What's your take coming in for escorts Kubota? 3,000 upwards, only scaling new highs all the time. But do you think any chances of this one actually going sub those 3,000 levels anytime soon?
3,000 is a very major support for the stock. If you actually take a look at last few months of movement that the stock has posted, it actually oscillates between 3,000 odd levels to about 3,300 on the upside. So till the time it's not breaking 3,000, I believe stock will not see any further correction. And the longer the stock actually holds on to this support level of 3,000, the chances are higher of it breaking on the upside. So do keep a close eye on this key support level of 3,000. In case there is a correction in the market and the stock then breaks 3,000 levels, then you can see a decent correction in the stock. Otherwise, I think stock will continue to go through a sideways consolidation that it is showing at the moment.
So that's the take on Escorts Kubota. The company also came out with its October sales number, better than estimates, but no cheer on the stock price as of now. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back. Welcome back to Buy Now, Sell Now, and Eat Now, show where we get you answers for all your stock-related queries. Today we have Aditya as well as Avinash with us. And Avinash, coming to you for the next query then. This one is from P. Subramaniam, and he's holding 50 shares of Idea Forge, but his buying price is 1,010 rupees. Should he wait for some more time or book loss at this point in time?
I think, Srishti, if he has a 2-year view, then I think he can continue to hold, because, this company has a very strong product kind of bouquet, has a very strong technical team. And most importantly, I think going forward, the drone market is going to grow exponentially. They are an established player. So I think in terms of valuations, obviously some correction has happened. But if the investor has a 2-year view, then I think he should not book out a loss. In fact, he could average a little more, but keep a time frame of 2 years so that he can get a decent risk reward. But yes, in the near term, I think I don't expect any immediate upside. So whatever gains can come only over the longer term.
All right. This next one is coming in from Sagar. He wants a technical view on DVs, Loris, Biocon. He's saying he's holding short positions in all of them from the levels of 3,700 for DVs. For Loris is 375, and for Biocon is 260. He's asking you, Aditya, that do you see another leg of downside because he's saying that he expects another 10% decline, or do you actually think it's better to book out profits right now?
So Cheryl will first talk about DV's lab. Stock has an immediate support at 200 DMA, which is at 3370. So do watch out for that. I'm talking about cash levels. Do watch out for 3370 on the downside. If that is broken, then maybe he can continue to hold on to short positions for a target of 3250, 3260 on the downside. If in a couple of days' time stock doesn't break 3370, which is the 200 DMA, then I would suggest do cover up your short, because then there could be a case for a short covering rally. Talking about Loris Lab, there too stock has given a breakdown and it is close to its 200 DMA, which is at 349 on the downside. So do keep a close eye on 349. That should be your immediate target. If that is broken, he can continue to hold on to short positions for targets of 330 on the downside. If 349 is not broken, then cover up your shorts. As far as Biocon is concerned, there too a decent correction has already taken place. Stocks is sitting at oversold levels. So I would suggest cover up your short positions in Biocon, because very strong supports around 217 odd levels. As far as Biocon is concerned, cover up. Rest too, we can continue to hold on to short positions and monitor the 200 DM on both the stocks.
Okay, Avinash, coming to you for the next query then, and this one is on Mahindra Logistics. V. Ravichandran has bought 300 shares from a price of 375 rupees. He wants to keep this for a long term, and what's the outlook maybe for the next 3 years, as well as can he go ahead and invest further at current market price in this one?
Yeah, I think Shristi, if he's got a 2 year plus view, we can definitely average and accumulate the counter. See, I think Mahindra Logistic is a very well established logistic player. And I think looking at the kind of growth in GDP, normally logistic companies do well when the economy as a whole does well. Mahindra has definitely been one of the promoters here. And I would not be surprised that if he has a 2 or 3 year view, then I think he could definitely expect a decent reward. Maybe in the near term, the stock would remain volatile and, range bound. But longer terms, I think there could be a good amount of decent upside for him. So he can accumulate with a 2 to 3 year kind of time.
All right, this next one is coming for you, Aditya, and this one is from Indu. And she wants to know what's the correct right entry levels coming in for ACE, that's Action Construction, as well as Triveni Turbine.
We'll talk about ACE first. Cheryl, stock has actually given a solid breakout and trading at all-time highs. If she's looking for a re-entry, maybe 800 is a good level to get into the stock. At current levels, if she buys, maybe she can look at a target of 890 on the upside, but the stop loss has to be 800, stick stop loss at 800, because then stock, I believe, can correct below 800. As far as Triveni Turbine is concerned, there too, stock we see has been trending higher. So maybe closer to about 340 is where I'm looking at for a fresh entry, and she can look for a target of 365 on the upside.
Okay, Aditya, coming to you for the next query. This one is from Samba Siva Rao. He's holding two counters. Firstly is DCX Systems. Over 4,500 shares for this one from a price of 343 rupees. He wants a short-term advice on this one, and he also has SH Kelkar, 5,000 in quantity from a price of 162 rupees. In both the counters, he's sitting at a loss. Any hopes on recovery in the short term?
Look at DCX, Srishti, not a very good looking chart to be honest, and there's a bit of a liquidity crisis as well, not a very liquid stock, and then we see sudden spikes in the stock. So I'm not too bullish here. Maybe if because he's already sitting at losses, he can look to put a stop closer to about 284, and it's a recently listed stock, so I don't have much data as well. So maybe 284 should be the stop loss for the stock that he's holding on to it. Below that, stock can correct. As far as SH Kelkar is concerned, yes, this is a better looking chart and it has taken support at 200 DMA from there. Stock is bouncing back. I expect further higher levels in the stock. He can continue to hold on to it with the stop loss closer to about 130 and look for a target of 175 to about 180 on the upside. So this is a better looking chart and continue to hold on to SH Kelkar.
Avinash kept you waiting for long, but a lot of technical queries actually pouring in. This one is coming from Dr. Seema from Hyderabad. Wants to know about CMS info. Is it a good stock to look at for the longer term? And do you think it's advisable that she looks at buying this one right now, Avinash?
Yeah, I think basically, CMS is a very leading cash management player. And I think recently Q2 numbers have been quite encouraging. Most importantly, the scalability in this business is quite solid. And I think in the next, say, 2 years, if the investor can hold on, I would believe that, you could definitely get a very decent risk reward. The stock is available at decent valuations also. So I would suggest that, if the time frame is at least 12 to 15 months, one could expect a decent upside. So definitely continue to hold.
Okay, continue holding CMS info. But Avinash, what's your view on CDSL? Dinesh from Bangalore is holding 540 shares from a price close to 1,200 rupees. Is that a hold or sell at this point in time?
I think CDSL should be held on. See, Q2 numbers have been solid. Almost 18 lakh new DP accounts have been added by the company. And recently, recent reports suggest that NSDL is now going to go public. So I think, now you would be having a comparable competitor for CDSL. So I think valuations for existing, players like CDSL would obviously inch up ahead of the IPO. So my sense is longer term prospects and the announcement of the NSDL IPO make it quite interesting. So I think continue to hold good long term prospects.
All right, this one is coming for you, Aditya. This one is coming in from Nagesh, writing to us from Bangalore. He bought a Dixon 5200 call option and PVR Inox 1660 call option for November. Wants to know what to do with both of these counters and the call options that he has.
Cheryl, not a very good looking chart as far as Dixon is concerned, and then the buying call option is extremely risky considering the time value erodes very fast. So maybe 5,065 is a very good support for Dixon. You should closely monitor that. If the stock breaks 5,065, then he should exit from his call position that he's bought. Which was the second stock I missed out?
PVR Inox at 1660 call option.
Okay, PVR Inox. There he can actually look to hold on to it. There is a bit of a up move that I see in the stock. So closer to about 1630, 1635 is where I believe stock can test in a day or two. So there he can look to hold on and book out profits wherever he sees decent profits in the PVR Inox call option.
Okay, Avinash, the next query is coming in on Surya Roshni. Umesh Gupta from Vadodara has bought the shares before the split happened, and he's sitting at a profits at this point in time, but wants to know, should he continue to hold this one? How the prospects looking like for Surya Roshni?
Yeah, I think he can continue to hold. See, Surya Roshni has done a demerger of its pipe business and the light business. My sense is, the current, business of the company revolves around the lighting business, and I think there's a huge amount of headroom for growth here. Considering the kind of long-term prospects, if the investor can hold for at least next 12 to 18 months, definitely I think upside can be quite reasonable. So I think he should continue to hold. I would believe FY24 and 25 should be equally strong years. So for that reason, I think it's definitely a buy on decline also. And even at the current levels, he can, average little more if he wants.
This is coming from Pratiksha. She's writing to us all the way from Oman, and this one is for you, Avinash. She's holding NTPC, BHEL, NBCC. All of them, she's seeing a loss of around 10% in her portfolio. She's saying she can hold and also average it, but she wants a fundamental view on all three of these counters. How do they look fundamentally? Do you think it's worth averaging right now for all of them, though she's suffering a loss, so which means that she can buy them at a lower price right now and average her portfolio? NTPC, BHEL, NBCC.
All the three companies, I believe, Cheryl, are definitely poised to do well. If the investor can give in at least 12 to 15 months, because BHEL is now sitting on a very strong order book. My sense is that BHEL would benefit quite significantly. Most importantly, if you talk about NTPC, they've already, they are already in the process of commissioning their incremental capacity. So I think NTPC and BHEL, if the investor wants, she can average out even at the current order levels, keep a time frame of 12 to 15 months. As far as NBCC is concerned, after a long time, also the company has bounced back. The company has a very record order book. So again, here I would not suggest any fresh buying, but yes, I think if the investor can again hold for 12 to 15 months, definitely I think the investor can hope to make a decent amount of risk reward. So please continue to hold. I think she should not cut her losses in any of these stocks.
Okay, Avinash, the next query is coming from RK, and he has given 4 counters where he wants your view. So basically, he has Welspun Corp, ITD Cementation, as well as Action Construction in his portfolio, and having approximately 60% profit in these, wants to know good time to book out profits in this one, on any of these names. And he also has Som Distilleries, wherein he is having 9% loss at this point in time. His time frame is for the next 2 years and wants your advice in these 4 counters.
I think as far as profit booking is concerned, Srishti, you could book out some partial profits from Welspun Corp and obviously from Action Construction. Action Construction has actually moved up by almost 20% in the last 10 to 12 days. And despite the fact that it's sitting on a large order book, it's got a good amount of defense contracts. My sense is that now valuations have become pretty expensive. So I think some amount of profit booking would be advisable. He could possibly hold on to the rest. And as far as Som Distillery is concerned, I think if he has a time frame of at least 6 to 12 months, numbers have been very robust. In fact, in terms of both volume as well as profitability levels. So here I would suggest give a time frame of at least 6 to 12 months. He could definitely recover his loss and make a decent upside here, provided he holds on for the next 12 months.
Okay, the next one is coming from Sri from Cochin, and he wants to know whether it's good time to buy L&T. Aditya, and if you say yes, then he wants to know what levels. Also, if he wants to know if L&T can appreciate in the short term, and what sort of a target would you give this particular counter? We know L&T, a solid company, stellar earnings, stellar lineup of orders, but the movement when you talk about L&T is pretty slow when you talk about the stock price, right? So what sort of a target in the short term will you give this one, and should he enter right now?
Cheryl, if the time frame is short, as the investor was suggesting, this is not the right time to buy L&T because I see a decent correction coming in L&T despite the fact that the numbers are pretty good. I believe stock can test levels of 27.40, 27.50. That is the immediate support level. That is where you can start to look at buying L&T because we have to also keep in mind that the stock has outperformed in the recent times. So a correction is due in the stock, and I believe around 24.70, 27.40, 27.50 is where he can start to look this buying the stock for a target of again 3,000 on the upside.
That's the take coming in on L&T. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back to take more of your queries.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let's continue taking your query. The next query that I have is coming in from Siraj Manager, and he has about 100 shares of Deccan Gold Mine at a price of 126 rupees per share. Aditya, he wants to know what's the prospect of this particular counter when it comes on the charts, Deccan Gold Mine, because I believe a few days ago you had a positive news flow also supporting the stock. But on the charts, how's Deccan Gold Mine looking to you?
Looking one, Cheryl, not very aggressive. I would go long on the stock. Maybe since he's already holding on to the stock, he can continue to hold on to it with a 4 to 5% more upside from current levels. I don't see too much of an upside in the stock from current levels.
Avinash, the next query is from Renuka, and she wants any of your top picks from the mid-cap banking space. Any two counters that you wish to highlight where she can invest for the long term?
I think she could consider IDFC First Bank. I think looking at the kind of stellar set of numbers in Q2 in terms of CASA, in terms of asset quality, the stock has corrected from a high of 95, 96. It's available at a fairly decent valuation. Hopefully, in the next 12 to 15 months, if the investor can hold, you could expect a decent upside here. And the second counter could be Federal Bank, again a very mid-sized, private sector bank, which is an institutional favorite and has a decent kind of presence in the south as well as a lot of NRI deposits in its base. Here also, I would suggest, if the investor can hold on for the next 12 to 15 months, one could expect a medium-term target price of almost 170 to 175. So I think both these companies could be acquired in this kind of market. Good companies, but you need to give in a lot of time and patience to get the risk reward in your favor.
All right, with that, let's kickstart with the rapid fire. Then the first one coming your way, Aditya. Rajesh from Bangalore wants to know about Adani Wilmar, 100 shares at a price of 358 rupees per share. He wants to know whether he should look to average right now or should he go ahead and book losses for a period of 3 months, Adani Wilmar, that is.
Never average at this prices, Cheryl. I always advise avoid averaging, but yes, it's very close to its immediate support level of 320, so that should be the stop loss. And until the time you see a reversal in the trend, never average a.
Okay, Avinash, what's your view on Rajesh Exports? Sachin from Karnataka holding the shares from a price of 530 rupees, sitting at a loss. Any hopes on recovery?
This is for me?
Yes, Avinash, for you.
No, I think one should avoid this counter. I think extremely volatile and very poor fundamentals. So I think I would avoid, keep away.
All right, this one is coming from Vivek. This one is for you, Aditya. JBM Auto is the bottom in place. He is averaging since 1480 is what he's saying. He wants to add some more for the long term.
If it's for long term, yes, he can look to buy more at current levels. Maybe look at a stop loss closer to about 1100. That is a very good strong support for the stock. And I believe stock will resume its uptrend, Cheryl. So no doubt about that. The trend is very strong, upward bias, but intermediate corrections are there. So 1100 is a very strong support. He can look to buy some more now and put a stop loss closer to about 1100. Look for a target of 1500 on the upside.
Okay, Avinash, what's your take on GMR Infra? Madhusudan is holding 3,000 shares from a price of 63 rupees. Should he continue to hold on or make a switch to any other name?
No, I think if he has a 12 to 18 month horizon, then he can hold on. I think long-term prospects are good, but in the very near term, the stock has corrected, has been sought because of low Q2 numbers. So I think continue to hold.
All right, Avinash, a quizzy one for you. Petronet, LNG, IGL, Gujarat Gas. Among these three, which one can Vishwanath Nair enter right now, or should he wait?
I think probably the gas companies, that is Indraprastha Gas, has corrected quite significantly. If he has a 12 to 18 month view, I think he can definitely acquire IGL. Obviously, the other two companies are also good, but Indraprastha actually offers a better risk reward as compared to the other two.
Okay, but with this, viewers, it's time's up on the Rapid Fire edition as well as onto the Buy Now Sell Now show. Thank you so much, Avinash and Aditya, for joining us today and helping all our viewers resolve their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.